Good afternoon and welcome to Southbank Live episode 15. My name is Boaz Shoshan and I'm joined today by John Butler. John, how are you getting on today?
Yeah, all good, Bose. How about you?
Very well indeed. Here I am in Chester at the moment. I'm dying to try out all of the tap rooms and pubs, but it's only noon, so I guess I'll have to wait a few more hours. John, how is everything going this week? We've got a lot of things to cover. Anything particular that stands out that you'd like to cover today?
Well, I mean, look, there's a lot going on, so much we could talk about. And many of these are topics we've already addressed in some form, but they continue to evolve, including the energy issue here in Europe, including the political maneuvering around the budget and debt ceiling in the US. But one kind of new-ish development is that stock markets are finally beginning to notice that all is not well in the world. And this is something that we've mentioned, but only in predictive format because it hadn't really happened
Right.
until quite recently.
Yes, it is. It is an interesting week. And you do wonder why, the stock market has been not paying so much attention, very calm, and sort of shrugging off all the bad news, and why suddenly this matters now. Do wonder whether or not it's the energy sort of component of that which is affecting it. But we do have a lot of things to cover today. We shall get to energy in a second. I would like to start with the crazy budget deficit, the crazy budget negotiations that are going on over in the States. And of course, we have the grand story about the platinum $1 trillion coin, which isn't, it's not the first time this has come up, but it's a very interesting idea. It raises all of these questions about, what money is, what it isn't. We shall start off with that today. It's a good. I'd like to just say, good afternoon to everybody in the chat. It is great to have a lively chat. We haven't even started discussing anything yet. We've already got loads of questions, which is great. So we shall crack on in a second. If you do like these streams, do feel free to give us a subscribe and to like the video. That really does help us out. But to start off with, the platinum $1 trillion coin. Now we have seen, a fair bit of discussion about this in the past. But now it's really coming to the fore again. I wonder what that is. John, in terms of the platinum coin, this is a very American topic. We don't hear this so much in other countries. Can you give us a bit of backing as to why, how this has come about? What does it really mean?
Well, this is not the first time such an idea has been proposed. There is some history behind it, and now, there is this odd legal clause in the U.S. law with respect to how the Treasury operates and the Treasury's relationship with the Federal Reserve. And I mean, going all the way back to the Constitution, it makes clear that only the Congress can coin money and specify the coinage of the United States. And it leaves none of that power to the executive branch. But in more modern law, of course, it is the Treasury together with the Fed that determines effectively the United States' monetary policy and arrangements. And of course, we left the gold standard decades ago. And so that's all gone out the window. But there's this obscure clause which gets around the fact that gold and silver were the original specified money of the United States, and that, again, only the Congress had the power to coin money. But nothing was ever said about other precious metals, including platinum. And there is this clause within a law specifying what the Treasury, U.S. Treasury, can and cannot do. It gives it the power to mint non-gold and silver coinage, so for example, platinum or other precious metals, in any amount, in any denomination, and to issue those effectively. And so a very, very creative interpretation of this clause is that the Treasury can mint a platinum coin, give it any face value it chooses. 1 trillion is the nice round number everyone's talking about today,
Right.
and effectively place that on deposit with the Federal Reserve in exchange for an equivalent amount of money because then the ledgers all balance out. It's a pure accounting act, as it were, but it's one that gets around the debt ceiling. That is, to raise this $1 trillion, the Treasury does not need to issue debt. They simply need to mint this coin, place it with the Federal Reserve, and get their money that way. It's actually kind of similar in a way to how modern monetary theory proponents argue that governments can operate.
Yes, and you do interestingly see a lot of modern monetary theory guys actually speaking out in support of the
Yes.
$1 trillion coin theory. It has its own hashtag. We need to, mint the coin. Saw that trending on Twitter a little bit. I would like to show just a couple of headlines. We do have a segment here, which is reading between the headlines. This is something we were intending to do when we first started the show, only kind of recently got around to implementing it properly. So if we just start off with the first headline here. This is from the Washington Post recently. Just saying, the debt ceiling is an absurd problem. Only an absurd solution can save us. A platinum coin worth $1 trillion or more would put an end to dangerous budget fights. You wonder, how dangerous are these budget fights compared to giving the government, trillions of dollars just by minting a few coins. I do recall when this first started out with the platinum coin idea. I first read about it back in 2011. Back then, they were only asking for $2 trillion platinum coins, whereas these days, the US government would be looking for a lot more of these coins. Going on to the next one, we've got one from Bloomberg here: how minting $1 trillion platinum coin could avoid a constitutional crisis. Then again, there's this one from MSNBC. The debt ceiling crisis may need a truly ridiculous solution. Biden should be ready to mint $1 trillion coin if the grand old party won't act. Now, just to sort of show how this isn't so much of a new idea, it's just returned to the fore with a vengeance these days, is this final one. This is actually from The Economist. And back in 2011, back in the middle of 2011, such a long time ago, this title, so crazy it just might work: the $1 trillion coin solution. Here's one way to get around the debt ceiling. So here we are again. It's another debate about the debt ceiling, and the $1 trillion coin is back. John, do you think there's actually a chance that somebody might do this?
Well, I mean, it tells you something about the bizarre state of the world we're in, that actually I think there's a distinct possibility that this might indeed happen. Now, that said, it unlocks a real can of worms. You mentioned constitutional crisis a moment ago. One implication of the Treasury choosing to do this would be to, in the eyes of many, be usurping the power of the Congress. Okay, not in the specific coin money way that I mentioned earlier, but with respect to the tradition, the political tradition, drawing on Article 1 of the US Constitution, that Congress has the power of the purse, that Congress must fund the executive branch. The executive branch cannot fund itself with its own policies, and it can't make its own laws. So that really would lead to a constitutional crisis. And I believe that the Supreme Court would not be able to sit this one out. That is, if the Treasury went ahead and did it, it would be challenged. It would end up in front of the Supreme Court very, very quickly. And who knows how they would decide the case, but it would be a real constitutional crisis around just who controls the power of the purse in the United States.
Yes, and when you're thinking of the MMT crowd, the modern monetary theory guys, they're always saying, it's the people who have the power of the purse, and we need to unlock the power of the public purse, I think, as the saying goes, from Stephanie Kelton, in order to fund this, that, and the other. In terms of what this says about the state we're in, as you alluded to, where do we go from here when there's such a big issue that people are saying we need $1 trillion coins being minted, deposited at the Federal Reserve? What does it say about the inflationary environment that we're in?
Well, I mean, everyone knows that inflation's been picking up. What's funny, though, is that this whole discussion about the $1 trillion coin is very much seen as just a technical sort of band-aid type solution to what many see as a ridiculous impasse in US politics, where the Congress is speaking out of both sides of its mouth. On the one hand, the Congress votes through a budget, but on the other hand, it won't vote through the increase in the debt ceiling needing to fund the budget. So, which is it, guys? And it does frustrate a lot of people. Why can't the Congress at least be consistent? And so, the executive branch, calls the Congress out on this, saying, you can't have it both ways, guys. So if you're going to pass a budget, we have to implement that budget. And if the only way to do it is to mint $1 trillion coin, well, that's what we're going to do. So I mean, that's really what this is about. It's not really about whether it's inflationary or not. Now, that said, that obscures the real point, because the budget itself is inflationary. It's huge. It will require a huge amount of increases in federal spending to meet. That will have to be financed. That implies either A, a hell of a lot of debt issuance, or B, a hell of a lot of direct money printing, via $1 trillion coin or something else they pull out of their hat. So it is inflationary by definition, regardless of how it's accounted for on the books.
Right. On that topic of inflation, shall I take a couple look at the questions in the chat? Enderman asks, why hasn't gold reacted to the inflation surge yet? That's a very good question, as gold hasn't been hasn't been playing to the tune everybody's expected it to, or in recent months. What would be your take on that, John? Because it does become harder and harder for people to deny that inflation is here.
Absolutely. And we've discussed this before in recent weeks and I've said before that the poor performance of gold in this context is increasingly curious. And I've tried to explain that by reference to the stock market and to other risky asset markets, that basically saying until they crack at least a little bit, gold may struggle to do particularly well. We've still been in a generally risk on, or at least not risk off environment. And gold would need that to definitively get back into an uptrend. But as I mentioned a moment ago, in recent days, we have finally begun to see some meaningful stock market weakness. And so I'm predicting now that as long as the stock market does not get right back into an uptrend, and yet we see all this inflationary pressure still building up, we see real yields, real interest rates still very, very negative, the gold will begin a very sharp rally to recover to a more reasonable fair value level for all those variables.
Yes. Now we do have a question from Glenn here, referencing paper futures contracts and the COMEX. Glenn says, I'm into gold miners, but those and spot gold and silver prices seem held down through COMEX paper trading. What's it going to take for gold prices to break the bankers' stranglehold? Well, Glenn, we did actually do an episode of Southbank Live. If you just go through the playlist, we did focus one episode mainly on the possibility of gold and silver prices being manipulated and what it might take for gold price to really break out of that if any such manipulation were taking place. But if you had any comments on that, John, they would be appreciated, just in terms of what you think it might take for gold prices to really break through of the kind of stagnation we've seen over the past year.
Right. Well, look, we have discussed the topic, as you say, and there is evidence, although it's circumstantial evidence, that gold is used as a method of basically of funding, of cheap funding by the banking system, in particular for the bullion banks, which are the members of the LBMA. And that in the short term, at least, as a result of using the so-called unallocated gold market as a cheap source of funding, that can be a bit of sort of tail wagging the dog on the physical market for gold. And whether or not you call it manipulation really depends on how you define manipulation, but it certainly can impact the price discovery taking place in the global gold market in a way which can, I believe, temporarily depress where the price of gold would otherwise be were that unallocated gold pool of trading not to exist. And this goes back to what we discussed about the details around the Basel III treatment of gold and so on and so forth. And I don't think we should get off onto that tangent here. But what I would say is this, is that you can't rule out the possibility that part of gold's lackluster performance of late is related to these temporary factors that occasionally pop up now and again when you get a disproportionate increase in unallocated gold activity vis-a-vis a relative decline in physical market activity, and or the gap is simply growing in either way. That is, you could have unallocated activity stable and yet physical activity declining. There is actually some evidence that there has been a gradual closing of positions here in the gold market that leaves it a bit tighter, as it were, yes, and more able maybe to stage a comeback. But that is just fairly superficial data in that regard, but it is beginning to point in that direction.
Yes, we'll have to wait and see, of course. I mean, you do wonder just how long gold can stay down when the signs of inflation seem to be everywhere these days, especially when you have lots of supply chain shocks, as we've been covering with energy recently. And we shall get onto the energy topic again. But one more thing when we're talking about this, the $1 trillion coin, the platinum the magical creation of money out of nothing. John, you see this as some modern form of alchemy. This is playing on sort of the very old idea of creating gold from lead or from other sources. What's your take on that? Because you had an interesting, you spoke to me before we started going live, an interesting comparison to Goethe's Faust.
Yes, well, I mean, Goethe's Faust is arguably the most eloquent discussion about what you might call monetary alchemy in all literature. I mean, it's truly genius, and there's maybe no coincidence here because Goethe was the German finance minister at one point. He wasn't just a absolutely talented dramatist and author and arguably just outright philosopher.
Right.
He was also the German finance minister, and so he had practical sort of experience of this. And he used this concept of creating money out of thin air, paper money, as a form of financial alchemy in Faust. One of Faust's many sins is to go down this road of trying to basically grow wealth and become wealthy through the printing of paper money. And it is, of course, Mephistopheles, the devil, that talks him into this as one of many horrible things that he talks him into during the course of the story. And so this concept of conjuring money out of thin air, of using alchemy to turn lead into gold, is a very, very ancient concept that Goethe presented in particularly eloquent fashion. But Goethe also meant it very clearly as a warning. I mean, after all, look what happens to Faust in the end. It's not very pretty.
No.
And so that term alchemy has been applied to more modern finance by a number of luminaries, including former governor of the Bank of England, Mervyn King, who used it to help describe the means whereby the modern financial system had very dramatically weakened its foundations heading into 2008. So it's a dangerous game, right? To try and use magic, as it were, to run the monetary and financial system. We are, again, I'm mixing metaphors now, but we are kind of playing with fire. And this $1 trillion coin is but the latest example thereof.
Yes, it does seem like we're in a pretty dangerous spot when it comes to where money might be summoned from in the future and just how it might be abused. There is, I should say to everybody watching this, there is a book which John recommends. I have linked to it in the description of this video. It's called Money and Magic: Critique of the Modern Economy in the Light of Goethe's Faust. It is hard to get your hands on, though I'm sure there will still be some vendors out there. It's published in 1994, though it does seem to be tricky to get. But John does recommend this very much, and if you're interested in exploring this a bit more, I would thoroughly recommend it. Now, John, there is moving on to our next topic, I think, for the day. And again, with reading between the headlines, as it were, there is a headline I thought we could explore a bit more. This one is from The Guardian. Nord Stream 2 approval may cool gas prices in Europe, says Russia. Deputy PM calls for rapid clearance from German regulator after prices reach an all-time high. Now, we've covered energy, the interesting Nord Stream story in previous episodes, but this is a rapidly unfolding event. There are new sort of pieces of the puzzle coming on, being put into play, as it were. Every week we cover this. So I think it'd be good to have an update on what's going on when it comes to energy in Europe and the Nord Stream 2 geopolitical relationship between Germany and Russia.
Well, it's fascinating to see just where we've ended up here, right? And there are those who are saying, "Oh, wow, nobody could have seen this coming." But in reality, I think anyone who has been studying the shifting moves on the chessboard, as it were, of European energy politics could have predicted that at some point we were going to come to some sort of confrontation, right in the middle of that chessboard. And guess who occupies the middle of the chessboard? It's Germany. They're right in the middle. And
Yeah.
Nord Stream 2 is a pipeline which is pretty much ready to go, which runs from St. Petersburg, or right nearby St. Petersburg, in the Eastern Baltic, to northeastern Germany. And is the first time ever that there will be the potential for direct, uninterrupted gas transport between Russia and Germany, which of course is the industrial heartland of Central Europe, or Europe more generally. And so that is a big deal because it fundamentally upends the energy politics of Europe. No longer does Russian gas need to pass through Ukraine, which is a regime that has clearly been fought over by Western Europe, NATO, the US, as it were, on the one hand, and Russia in modern decades, ever since the Soviet Union imploded. Germany doesn't like being dependent on gas having to transit through what is this sort of geopolitical battlefield, as it were. That said, Germany is, however, willing to run the risk of having a growing energy dependence on Russia. Whereas it's not clear at all that the rest of Europe feels the same way. They don't necessarily want to be more dependent on Russian gas than they already are. And you can imagine how the United States feels about that. They obviously don't want Russia to have too much influence in Europe, and so the U.S. is actively discouraging. Although much of this occurs behind the scenes, of course, but the U.S. is actively discouraging Europe becoming more dependent on Russia for its energy needs. Moving things closer to home here in the UK situation is somewhat unique, but you just can't escape the general energy mayhem when you're on this island here, because even though the UK is an island, the UK relies on gas imports for a lot of its needs. And while those imports may not be coming directly from Russia, that is, they come more from the Netherlands and from Norwegian sources and these things, nevertheless, the price is the price. The market is the market. And when you get a huge blow up in the European gas market generally, it also leads to surging prices here in the UK.
Now, of course, Germany, if you're here in the UK, Germany, and what's going on in Germany does seem somewhat more removed. Though what happens in Germany is going to have huge consequences for Europe as a whole. And this relationship with Russia, what it might do, it does seem like this is something which is going to come to a head at some point in the near future as to which way sort of the wind blows when it comes to Nord Stream 2 and Germany's relationship with Russia. The thing is, as we've covered in recent episodes, the election situation, the political situation in Germany is not concrete. It's not solid. The situation is fluid, as the saying would go. And what happens there is going to have huge impacts on where the Eurozone and EU policy goes from here. John, could you give us an update on that?
Well, this is where the plot thickens even more, because we've just had a historically very significant German election. The longest serving post-war chancellor, Angela Merkel, is now leaving the stage. And she's leaving the stage at a time when the major parties on the left and on the right have failed in the most recent election to form or to gain enough seats to be able to form ruling coalitions that they can effectively control. And so it's a real free-for-all now. And so it's difficult to predict what's going to happen. Now, the simplest prediction is that you're simply going to get gridlock. Nothing's going to get done. No one's going to have a mandate, and Germany's going to be kind of dead in the water. But that doesn't wash with this energy crisis. There is no way that Germany is just going to sit and do nothing while their corporations become economically completely uncompetitive in global export markets as a result of absurdly high energy costs, right? Yeah. They will find a way to get through this somehow. Now, I cannot predict how that's going to be, but I just don't think Germany Inc. is going to be dead in the water in the face of soaring gas prices for a prolonged period of time. So Germany will make a choice, and I believe the choice is pretty clear. They will do a deal with Russia to get Nord Stream 2 fully operational. If the EU tries to block that deal, Germany will say 9 and go ahead and do it anyway. That will fundamentally fracture Germany's previous relationship with the EU. Yeah. Where Germany was seen as kind of an equal to France rather than as a superior power within the EU, notwithstanding its much more powerful economy. And that will lead to some soul searching within the EU regarding, what is the way forward now? If Germany decides, look, our national security, national energy requirements simply require us to embrace Nord Stream 2 and therefore embrace a much closer relationship with Russia at the expense of the EU, well, what does that mean for the EU? How are they going to continue to integrate and progress and all these lofty words that they toss around now and again if Germany is starting to act as a more independent and neutral power? That is also of tremendous historical significance. So I think that's where we're going. It's not necessarily a bad thing, but it does shift the balance of power a bit. It does move some pieces around the European chessboard, and some of those pieces, that is, some of the interests of the smaller players on that chessboard, might need to be sacrificed.
That's very ominous the way you put it that way, John. But in terms of how you think, well, in terms of a broad prediction, obviously we don't know what's going to happen. But in terms of what you might expect with how Germany might start treating some of the other European nations differently, do you have anything in mind?
Well, no, I mean, this is very early speculation on my part. I think in general terms, you can see things going this way.
Yeah.
Precisely which decisions might be made is difficult. But let me give you an example. There are a number of smaller countries that border Germany, or that nearly border Germany, that are very, very heavily economically integrated
Yes.
with Germany, and are just as, if not more, dependent on Russian gas as Germany, but who, because of their historical experience and their close geographical proximity to Russia, don't like the idea of Germany being too cozy with Russia. Historically, when Germany and Russia got cozy, Eastern Europe kind of got caught in the middle,
Yeah.
and didn't really have the amount of national independence that they would prefer to have. So this is an extremely touchy topic for those countries. And it will be interesting to see how Germany might try to reassure them in the event that Germany does eventually do as I expect, and go ahead and follow Nord Stream 2 to its logical conclusion. But then there's also the issues further to the west. How is NATO going to feel about Germany getting into bed with Russia for energy security? Does that also fracture NATO in some way?
Yeah.
I think maybe it does. And of course, the NATO, of course, is a security organization that disproportionately benefits the smaller players, because they're the ones that would never be able to defend themselves if there were not some sort of Western European coalition of the bigger and the smaller states backed up by the US. So there are lots of pieces on the chessboard, but what's happened in recent years is that those pieces have got ever more clustered right around the middle of that chessboard. And there's going to have to be some swapping and sacrificing now for the game to be able to continue.
John, in terms of market consequences and how investors may react in the event of Germany making quite a distinct shift away from EU interests in pursuit of its own national interests, what do you think might happen? I mean, the sort of the gut reaction would be, well, it'd be bad for the euro, but maybe it wouldn't. Maybe there'll be a different response.
I think it really depends on how the other main EU players would respond, because in principle, nobody wants the euro to be something that's sacrificed as a result of Germany doing what it feels it needs to do to protect its energy supplies and protect its strong competitive export economy. So clearly negotiations would take place, but the trade-off here is kind of the following. You either get cheap gas or you don't. And if you don't get cheap gas, well, guess what? That's ultimately going to be inflationary for the economy of the EU as a whole. And if that's ultimately inflationary, is the ECB just going to step back and let that inflation play out and be accommodative of it? Which is kind of the indications that they've been giving in recent years, that they welcome higher inflation. That's okay. We'll keep printing money. We've got to protect our weak banks with easy money and protect our weak economies with easy money, and. But Germany doesn't feel that way at all. And you can see a situation where Germany plays hardball, maybe even harder ball than Russia's playing, by saying, okay, if you're not going to let us have cheap gas, we're not going to let you have easy money. And so the ECB is going to have to start tightening policy and protect us from the inflation that's going to keep rolling through if we don't solve this gas problem. And if Germany is smart, that's how they play it. And that's how they win, in the sense of they get their way with cheap energy, and they manage to placate their partners in the EU by allowing the ECB, for the time being, to continue with an accommodative policy, which keeps the euro together. But Germany is in the unique position of being able to threaten the ECB's independence and the health of the euro project with this, by playing this energy card, by taking the card from Russia, as it were, and passing it right on westwards to its other EU partners.
Fascinating stuff, John. It is always great speaking to you about how, the geopolitics and the political economy of inside the Eurozone, and yet the external sort of energy forces with Russia play together. It does feel like it's going to be quite a zero-sum decision. Whatever decision is made, like someone has to lose to some degree, and it will be very it's not a good time to be one of the people who are making those decisions. I imagine there's going to be a lot of unpopularity as a result of whoever it is that does try and push forward with whatever the new policy might be. Now, we do have plenty of questions in the chat today. It's great to see a very lively chat. We do have a lot of comments regarding green energy. I think those would probably best fit to James Allen. We do have some on the likes of ammonia and hydrogen. It would be best to pose them to James Allen, our energy expert who we had on last week. I shall save those that have been put forward, and I'll ask James about those in the next episode he is on. We do have some more on the German situation. Keith asks, if Germany moves towards Russia, then the EU will move that way too. Bad news for NATO, the US, and the UK. Yeah, that's an interesting sort of counter, John. Do you think that Germany has enough sway in the EU that whatever Germany does, it'll manage to get everybody to be on board with it one way or another, because Germany is such a big stakeholder? What do you make of that?
Well, I actually think that's a very astute observation, right? That is, you'll get an initial fracture, but it could well be that the key players in the rest of the EU realize that they have to make a very, very difficult choice now. And the choice is, do we go ahead and kind of stick with Germany on this one and accept their leadership on this, and hopefully all benefit from cheaper energy as a result? Or do we risk alienating ourselves from the United States and risk the existence and the effectiveness of NATO as a source of security vis-a-vis Russia? And I mean, I don't have the right answer to that. Okay, I really don't. But that is it could go either way. I mean, it could go either way. Now, I mean, you have France, a country with its own independent nuclear force, which historically has not felt particularly dependent on NATO. And who knows, maybe Germany could make them some offer they can't refuse to continue to work together. And if so, I think the EU will rapidly heal whatever fragments begin to show and find a way forward. However, they would, in that instance, find a way forward with less ostensible US support. And in that case, maybe the U.S. ends up appearing like the loser, because they will lose their military and, by some extension, diplomatic and possibly even economic influence over Europe. It could go that way. And then the EU, I mean, then the U.S. would have a difficult decision to make. It's like, to what extent do we press that? To what extent do we make Europe's life difficult? To what extent do we punish them? Or
Right.
do we just accept that this is the course of history and we're going to have to go along with it as best we can? It's not every day that a superpower has to do that sort of soul searching.
Yes, and one does wonder how much influence they're already sort of levying behind the scenes on the decisions being made, and how much we'll actually know, what will be publicly available as to what America's influence has been. Not everybody in the chat believes that the US are paying too much attention. Trump winner comments, like Biden, NATO have any ideas or awareness about this lol. It's still nap time. John, do you think the Biden administration is asleep at the switch when it comes to this situation?
Well, I mean, we all know what one of Joe Biden's popular nicknames is, right? Which is Sleepy Joe Biden. Now, I'm not going to take a position on whether that's deserved or not. But what I would say is that you do have in this administration a huge number of experienced, career Washington insiders, many of whom have also served abroad. These are not stupid people. Okay. Now they may have an agenda. They may have priorities, which they, for their own political reasons, choose to keep to themselves. And it could be that those priorities are not ones that are necessarily in the true national interest of the United States. Okay. But I wouldn't pass these people off as simply being ignorant. I do believe, however, that what they say and what they do may not line up, right? That could well be the case. Because to be honest, I don't know what the U.S. agenda is here. But if you look at Biden's staff, I mean, it's practically a who's who of people who have been in power since the Clinton administration. That's a long time.
Yeah.
And they again they may have a huge misconceptions regarding the way the world actually works, but if they have those misconceptions, they don't have them because they're simply uninformed, ignorant people. They have them because they may have some messianic view of the US's destiny to remain the world's sole superpower forever, which is obviously horribly misguided. But if you see the world through that lens, then you see a lot of things differently than I would say more rational, reasoned people would do. But remember, if you, as the saying goes, if all you have is a hammer, everything looks like a nail. And if you actually then have the myopia to think the hammer is a hell of a lot larger than it really is vis-a-vis the nails, well, then you happily go around hammering and wonder why it doesn't work. And maybe the US will have to go through a period like that.
Yes, let's hope not, but maybe so. Leon asks, what about Nord Stream being short-term until green energy can be sufficient without it for Germany and the rest of Europe indirectly? Maybe only 5 to 10 years. Interesting point being put there. Could it just be temporary, the Russian-German connection, until green energy frees Russia from the the chains of natural gas? What do you make of that, John?
Well, look, I mean, you can't rule it out, but I've said this before, the record of green renewable energy in meeting anything like the promises and the targets that it has set over the past couple decades, that record is so poor, right? It's just indefensible. These people have clearly overpromised and underdelivered. They might refuse to admit it because people don't like admitting things like that, but it's just not living up to expectations. And given we've been at this a long time, I'm not sure that another 5 to 10 years is going to get us to those sorts of expectations either. So yes, absolutely. In the meantime, everyone realizes now that without gas, Germany's going to collapse. I mean, the economy just cannot function without affordable gas. There's no other alternative. Germany has some coal reserves. It's primarily dirty lignite brown coal, the most polluting kind. Nobody wants to try and suddenly go back to burning a hell of a lot more of that stuff. So I think that's probably off the table. Germany has been winding down its nuclear power capacity. At the rate it's going now, its final plant will close, and I think what is it, just over a year's time, 2 years time, something like that,
Yes.
and then it won't have any. And so I mean, Germany, look, we've ended up in this situation that nobody wanted to end up in. People wanted the renewable and green energy revolution to have already been working by now. And by working, I mean working in an economic sense. That is not just producing power, but producing power that people can afford and power that doesn't need to be subsidized with ever higher taxes. Okay.
Yep.
We're just nowhere near that yet. Absolutely not. And so even long-term planning now, if it's prudent long-term planning, has to incorporate the very real possibility that the transition away from fossil fuels is going to take much, much longer than previously expected. That is, any sitting politician has got now to be scratching their head and thinking, gee, maybe this is going to remain the case through my entire career. Am I going to stake my career on strictly green and renewables, facing a possible energy crisis, chronic energy crisis every winter and perhaps round the calendar for the rest of my political career? The moment they start to think that way, they realize their political career is going to be a hell of a lot shorter if they make the wrong choice.
Right, we have gone slightly off track with the green energy.
Sorry.
And no, it's quite all right, quite all right. It's always good listening to your take on it, because it's always much more. Well, it's very grounded in reality, John, rather than making ever more optimistic hopes about the future. One thing I'd like to go on to, we shall return to more questions, but we are getting on a little bit of time. So I'd like to jump onto our next segment. This was something that we were planning on doing from the very get-go, but we kind of dillied and dallied a bit. And I'd like to start off now, which was called our long short segment. And this wasn't my idea. This was actually once used in a podcast called Adventures in Finance, which is sadly no more. That was several years ago. I think it was 2018 that Adventures in Finance ceased to exist. But in it, Grant Williams, who's who's been one of our guests on a few of the events we've done at Southbank, would ask some of his guests, can you give us a long and a short for the week? So this is what's something that you think is going to appreciate, or something that you think we're going to see a lot more of as you're long, and something that you think is going to decline in price or in popularity as you're short. Now, John, I believe your long short for this week is related to the energy situation in Germany. Is that right?
It absolutely is. And for all my talk about how, this huge rise in gas prices in a way could have been foreseen, should have been foreseen, it's not just about Russia. There's been a lot of other maneuverings going on here that have led us to this situation. But here we are, and we've seen this colossal spike in gas prices everywhere, again, including in the UK, which isn't a direct receiver of Russian gas, but indirectly is heavily, heavily impacted by developments in that market. And yet here I am, all of that talk, and I'm going to basically say that my big short for the week is to short European gas prices. Now, that's not an easy thing to do unless you can trade the specific contracts that trade out there. But any related assets that you can find that would have a strong correlation to the price of European gas, I'd actually be short it now. I think the peak's behind us. I think Russia's offering of an olive branch to try and encourage the EU to see sense and let Germany go ahead and switch on Nord Stream 2, I think that's the beginning of a deal. And I think right now, while we speak, there are face-saving, sort of thoughts and negotiations taking place behind closed doors throughout the EU on how they can back away from their previous unwillingness to allow Nord Stream 2 to proceed. The moment it looks like Europe is willing to accept that olive branch from Russia, the gas price will fall by a lot. And no, it doesn't matter that we're headed into winter, because the price is so high now and is totally disproportionate to any seasonal variation we've seen in Europe through the winter, no matter how severe that winter is. And so gas would have to come down a lot once it's clear that a deal is being reached and negotiated and the gas is beginning to flow. So I'd be short at this point. I think we've passed the inflection point. I would be short European gas prices.
Right. And I should stress, of course, that it is for entertainment purposes only that we're doing the long short segment. We're not giving financial or trading advice. We're not telling you to go out there, get on a spread betting account and try and short gas as hard as you can. But John, what would be your long for the week?
Well, believe it or not, in my experience being a trader, and I've traded various markets for many years, including most commodity markets, I like pairs trades where you can pair one end, either long or short, against another end, either long or short. And by doing so, you diversify your risk a bit, and you also remove the possibility that your base currency is simply fluctuating, because that can also be a source of volatility.
Yeah.
And in this case, I like staying within the energy complex. And this also goes back to what I said earlier. I believe Germany and other countries, this includes Japan for that matter, for slightly different, although in some respects related reasons, are going to announce at some point, as a result of recent disappointment with renewable energy and recent issues with energy security, they're going to announce new next generation nuclear power capacity generation programs. And those are going to be seen as major political decisions that imply a structural shift higher in global uranium demand for an indefinite period of time. Now, uranium's been on a tear recently, but unlike with gas, where I believe we're close to a reversal, I don't see why the uranium price is going to have any meaningful correction if the world continues to drift in this direction over the coming months. And it could well be in just a few months' time, we get at least one announcement from one country that they've chosen to expand their nuclear generation capacity. Even here in the UK, that talk is taking place, right? I've seen it,
Yes.
I've heard it. And so this is, I believe that's a nice pair here to ride through the winter. Even though we're heading into the winter and normally you would expect gas prices to be rising, I think they're going to come right back down, and yet the uranium price will continue to trend higher for these more medium to long-term reasons.
Right. So short gas and then long uranium does seem like a good well hedged sort of position. The pairs trade idea, the pairs trades are always quite fun. And I think actually my long short for the week is a similar thing, because going back to our first topic when it came to the $1 trillion platinum coin, one thing I noticed about it was the first time I heard about it was back in 2011, when platinum was actually was in peak of a bull market. It was having a great time in 2011 to be a platinum investor, or it was all about to go wrong really, but it was a good time to be in platinum back in 2011. And here we are, the story's coming back again, and platinum is absolutely in the dumps, down in the doldrums. Still not really recovered from some of its lows, and does look to be really quite stagnant. But I was just thinking, well, maybe all this demand for $1 trillion platinum coins, maybe it's going to kick up the platinum price once again. So my long for the week would be platinum, and my short would be the dollar, because of course we're seeing all the spending being thrown around. Unlike in 2011, there isn't a Tea Party organization that's lobbying for any reduction of public spending. It's completely unacceptable for any political figure to be massively against huge spending from the US. So I do think the dollar is going to go down. It has seen a big rally recently, and I think that is going to be reversed. But of course, that is my opinion. We're not giving financial advice here. John, just looking at the chat, is very, very lively now, and looking at some of the comments here. Let's see. So from Trump winner again, so many NATO nukes in Europe already. Problem is that Russian defense systems have gotten amazingly good to the point where they don't even fear them anymore. One does wonder if as Russia is such a big energy exporter, and it has so much in its camp, just how strong and how adventurous do you think Russia might be when it comes to projecting its influence into Europe, especially if there is a deal with Germany?
Well, look, I mean, for all of Russia's potential military power, I mean, you might sort of say, well, actually, in a way, they've been pretty restrained in the way in which they've exercised it over the past decade or two. They've really only intervened when certain clearly red lines were crossed, and those red lines were usually explained well in advance. And where Russia's been proactive as opposed to reactive is in rebuilding its economy from the ruins of the Soviet era, trying to diversify its economy, which was partly a response also to the sanctions that were imposed on Russia back in sort of 2014, 15.
Yeah.
Right? Because they felt they needed to be more diversified. So that's been going on for a while. And of course, taking full advantage of their monumental resource riches, not only in energy, but in all kinds of metals, minerals, you name it, right? I mean, this is by land area, not just the world's largest country, but the world's largest country by a very large margin, right? And certain parts of Russia and people never even got going, digging holes in the ground and figuring out what was there until, maybe 10 years or so. And it takes a long time to discover what's there and to build the infrastructure necessary to, get whatever it is out of the ground and get it to market effectively and whatnot. So, I mean, I think really, in an odd way, because we don't think of Russia this way historically, but arguably their economic and resource potential has been their strongest card to play over the last decade or two. And so that's the one they've been playing. That's where they've really been making a proactive effort. And that effort, I believe, has resulted not just on the energy front, but with respect to other products and in all regions of the world, greater amounts of trade and trade relations, sanctions on various things notwithstanding. So that to me is where, do you really need to fear a Russia that is getting more active economically and building trade relationships, and one that might have a large military arsenal, but has only ever deployed it in recent years anyway, in reactive fashion, as opposed to sort of proactively the way they obviously used to, back in the day, right?
Right, yeah, and in a more imperialistic sense. Will be very interesting to see how that plays out. And as you say, that German deal, the German relationship is obviously going to be a very big part of that.
Sure.
Going back to metals, Nick is very insistent on a certain organization called MELD, which is launching a stable coin, so into the cryptocurrency space, launching a stable coin backed by gold, fractionalizing it and selling it as a coin using Cardano blockchain. What do you metals guys make of this? Now, it is very interesting seeing attempts that have been made to get precious metals onto the blockchain. There are many different projects that have tried this over the years. Recently, I was interested to find that the Australians had managed to use their gold certificate program to create a a tradable form of gold that's on, I believe it's managed on the Ethereum blockchain, though I could be wrong. John, what do you make of that? Do you think any of the stablecoin projects that attempt to do this to get gold-backed crypto are going to be a success?
Well, I think in principle, the technology is wonderful. I mean, why not? Why not take full advantage of blockchain technology, either in a through a proof of work or a proof of stake structure. I mean, they're both theoretically viable. Why not go ahead and take advantage of that technology, and yet combine it with the timeless, monetary store of value properties, or represented by physical gold. I think it's a great idea. I've thought a lot about the topic. I've written somewhat on the topic. So as far, my position on this is more power to them. Now, whether they actually do succeed in the end is going to have a hell of a lot to do with the regulatory environment, because as we know, the regulators, as the crypto market has grown in size, the regulators have gotten more and more active trying to come to terms with it, decide whether and how it should be regulated. And obviously, regulators being regulators, they want to regulate, right? That is their mindset. If it moves, regulate it.
Yeah.
And obviously, crypto has been growing and moving by leaps and bounds. And gold historically has been a market which governments have taken an intense interest in, because it was actually money. So it's not as if they're not going to just ignore this, right? They will have a look and they will decide. So you will need a supportive regulatory environment. Now, that said, you don't necessarily need a supportive regulatory environment everywhere. A handful of jurisdictions that are relatively neutral and global in their orientation might choose to really embrace gold-backed crypto. Maybe Switzerland would do it. Maybe Singapore would do it. Maybe a handful of other countries would do it, and they would champion the idea, and people that wanted to trade it and participate in that market could do so in those jurisdictions. And then perhaps other jurisdictions would follow. So just because one or two or a handful of countries decide to try and regulate it to the point of shutting it down, doesn't mean that it would necessarily fail on, everywhere. So it might certainly succeed in some places.
Right. I think I guess the ambition or the hope for a lot of people who want to see this blend of the ancient and the modern in gold-backed crypto is the idea that finding a truly global, internationally recognized gold-backed crypto, rather than having it linked to one nation, and allowing it, of course, to trade on crypto exchanges globally, where, of course, it can be freely, it becomes its own sort of reserve asset, as it were. I understand the Australian attempt at this, which is still in progress. I believe you can only get it on certain exchanges, so it can't be freely traded like so many of the others that you find on Binance and Bittrex and the like. On that note, John, I would like to ask what your take is on the recent resurgence in crypto prices, because we have seen a really strong move over the past week, despite looking like a lot of fear on the stock market, as we alluded to earlier in this conversation. And my observation on crypto so far is, while everybody sees it as this sort of safe haven and uncorrelated asset, and there's certainly a lot of that in the key philosophy that was behind it and from the early Bitcoin community, the manner in which it trades has been somewhat different, where it's behaved a lot like a tech stock on steroids. But I wonder if that relationship's going to change, and it's going to change its nature, its market nature in that way, and whether or not it may become a safe haven asset at one point. Maybe this the sell from the stock market while Bitcoin is surging is hinting at maybe that's starting to happen now. What do you make of that?
Well, certainly that's what the price action suggests, right? I mean, the fact is, yes, the stock market has been a bit creaky of late, as we've already discussed. Gold's been trading in disappointing fashion, and yet, notwithstanding what was a pretty sizable sell-off some weeks back in crypto, it's come roaring back. And could it be that it's decorrelating? Could it be that it's finding a new sort of a client base, as it were? Bringing in our new people entering the market, private individuals, institutions, people from other countries that previously didn't take interest in it. Something clearly is behind this. Now, that said, that something may not be hugely significant, because notwithstanding a very large market cap now, as it were, actual volumes traded in crypto still tend not to be particularly high as a proportion of that market cap, and they tend to be concentrated in the hands of relatively few players based on what we can see. Now, there's a lot we can't see, but to the extent you can see what's going on, you can see concentration there. And so I would still say, notwithstanding its size, that the market dynamics of crypto, even big crypto, including Bitcoin, are still those of a relatively thin, illiquid market that is actually fairly expensive to trade. And make a market in, as it were, economically, unless you're really big and you can net stuff out internally. Okay, so that is just not mature enough yet, and what that means is that the price action cannot be taken like for like. No 2 days are the same,
Right.
right? You can't just assume this is a mature market and pretty much prices go up and they go down. But in terms of the underlying liquidity and dispersion of that liquidity, you can't assume that any 2 days are the same in crypto. And so it's difficult to draw too many conclusions from either short-term price action
Yes.
or from chart patterns, which of course are what technical people tend to use.
Yes, of course. I agree. I mean, just in terms of the idea that Bitcoin is sort of changing its stripes now and finally becoming a safe haven, it certainly is too early to make that call, I think. But it shall be very interesting to see what happens with it. I think some of the behavior that we're seeing recently, now we're in October, is looking forward to what's going to go on in November with the rollout of Taproot. This is something we've discussed a little bit on Southbank Live in previous episodes, and we are getting closer and closer to it. Next week, we shall have Sam Volkering on the show, and he will be making his sort of predictions for what's going on with that. And we'll go a little more into the bushes with what Taproot is and how it works. But for now, John, just in terms of Bitcoin and the manner in which it works, I do agree that from one day to another, because the liquidity can change so much with who owns the most Bitcoin, does seem to be that we're still a fair bit away from it becoming so much of a developed market like you would find with the tech stocks in the US, for example. We are getting on a fair bit for time, but I'd like to do maybe just one more question if we could. We did have a question here regarding some of the smaller nations within the EU as a result of the Nord Stream relationship with Germany. This one comes from David. As a result of Nord Stream's relationship with Germany and the domino effect of Poland, Estonia, and Lithuania falling into line, are the days of the EU project on the decline? And further to that, Peter did comment earlier, Russia will have the EU by the balls if they start relying on Russia for gas. How easy is it to turn off the tap? One instruction from Putin. John, what would be your take on that?
I mean, look, no one wants to be dependent on one country, one person, one energy source. No one does. But geopolitical reality is what it is. Germany doesn't have a lot of choice in the matter, right? I mean, even if they do choose to go down the nuclear road aggressively, which I think is a distinct possibility, as I mentioned earlier, I mean, that's going to take years, right? Years before they can really develop that as a source of energy security diversification. So, what choices do you have? And I think that I mean, who wants to cozy up to a country that has historically not always been stable, that has historically not always been friendly to you, and which even today appears to have a form of government which is not necessarily the same as your own?
Yeah.
Who wants to do that? Well, guess who wants to do that? Somebody who wants cheap, affordable energy so that they can produce their widgets at affordable cost, export them around the world, and make money. It's human nature. What is it going to be? There's a trade-off between security and prosperity. There always is. And it always needs to be dynamically managed. There is not necessarily a clear right answer, but things do shift from time to time. And I think it's just reality, geopolitical and energy availability and security reality, that Germany will continue to cozy up to Russia for the foreseeable future. It's been happening for a long time. When former Chancellor Gerhard Schröder decided to sit on the board of Gazprom, you knew the world was changing. And that That was years ago now,
Yeah.
pre-Miracle, right?
Right, right. A very long time ago. John, we are almost into 1 p.m. now. I think we shall call it off there for episode 15. It has been a very good episode as ever. Great discussion, all manner of themes that we covered today. Thank you to all who tuned in. Very lively chat, which is always good to see. Sorry we couldn't answer all of the questions. There were some on renewable energy that I shall pose to James Allen the next time he is on. I've got them all saved. But John, that's all for the moment. Thank you all for tuning in. And John, thank you so much for joining me.
Thank you, Buzz.